All right, in today's report, I'm going to start with the stock market. First off, let me look at this again. This was just a ridiculously long intermediate cycle, and by any normal circumstance, this cycle should be short. We shouldn't we shouldn't get a 40 week, I think that's what this was, 40-week cycle followed by another 30 or 40-week cycle. So one of two things has got to happen. We've either, at some point, maybe we started it yesterday, um, moved down into a daily cycle low, and then we have another complete daily cycle, maybe that runs a little bit short, and then we get our ICL, maybe sometime mid-June. Or this daily cycle right here runs long. This is right now we're on week 18 of this intermediate cycle. If um, if this were to turn into a daily cycle and an intermediate cycle low, so we end up with some kind of a crash type event here in the next 2 or 3 weeks, that could give us not necessarily a short cycle, but at least a normal cycle. Normal for stocks is something between 18 and 22 weeks. We're on 18 now. If we could spend maybe 2 weeks here moving down into a stretched daily cycle low that drops far enough to that we could at least consider it as an intermediate cycle low. And by that, I'm going to say at least back down to 2,800. And, I would feel better about a move at least back to the 38% retracement. So in that case, we would be back here somewhere around close to 2,700, in that range between 2,700 and 2,750. That would give us a 38% retracement. That would definitely qualify as at least an intermediate cycle low. We could move down out of these overbought levels on the weekly charts. And that's typically how these really extremely right translated cycles, and I'm also going to say cycle that has been propped up. That's how they tend to bottom or tend to move down into ICLs, as they have sort of a mini crash. So this was a perfect example here. It's only took 2 weeks to get to this bottom, simply because the cycle was so right translated as we worked up into that top. There just wasn't a lot of time left. So the ICL had to occur quickly over a very short period of time. I think we're in that same boat right here. I just find it hard to believe that we could have another 30 week plus cycle. I think this cycle's got to somehow, it's got to either shrink or at least run a normal duration. We're already into normal duration with 18 weeks. So my thought is that we're going to stretch this daily cycle a little bit, and maybe over the next 2 or 3 weeks we're going to get some kind of really severe move down that maybe comes back down to test this 38% Fibonacci level, and that would be our ICL, and that way we wouldn't have to go through a third daily cycle. The ICL would just bottom with one normal daily cycle and then one stretched daily cycle. Right now, that's kind of my expectation. We'll have to see what happens next week, and first thing we need is a weekly swing, and if we can get a big move down tomorrow that breaks below 2,900, then we could end up with a bearish engulfing candle this week. All right, so that's kind of my expectation for the stock market. Stretched daily cycle, ICL sometime in mid-May. All right, moving on to gold. This morning I saw a lot of people. We had a decent little bounce this morning. Looked like maybe we could be putting in a bottom, but I cautioned, at least in the comment section anyway, that you need to be careful about trusting these kind of moves when you're in a bloodbath phase. People are going to be trying to pick the bottom as we enter the bloodbath phase. Every day is, we're extremely oversold, so there's always going to be buyers during the day trying to pick the bottom. But until the bloodbath phase is over, typically what happens is you get a bounce early in the day, maybe into midday, but then it just fades away by the close, and that's exactly what happened today. So I would I would highly recommend that um, just kind of ignore what happens during the day, taking everything with a grain of salt. Only watch the close. That's where we're going to get our clue. If we can hold on to a rally into the close, then maybe something has changed. But most of the time in the bloodbath phase, buyers just aren't there yet, and the market will just kind of fade, or the rally will fade away into the close. So, we there was a chance that this might turn into an unusual intermediate cycle low. We had possibility for a triangle up here. Didn't play out. We had a possibility that maybe we were going to bounce on the 200-day moving average and not break the intermediate trend line. That didn't play out. So at this point, I think we just have to assume this is going to be a normal ICL. The bloodbath phase is, I think we should assume that it is going to last 5 to 7 days. In the case of miners here, this is only day 2, and we did break the intermediate trend line. So moving over to gold. At this point, I think we should assume that gold is also going to break the intermediate trend line. So we've got a ways to go yet. Maybe we count today, since we did actually close below this support zone here at about 1275. We did close below it today. Maybe we need to assume that this would be day 1 in gold, day 2 in the miners, and I think maybe we should just plan on a Friday and probably maybe most or all of next week. Maybe we bottom the next Monday or Tuesday after next week. So I don't think you need to pick a bottom right here. I don't see, or I think we should just assume things are going to run normal, and we're going to get normal parameters for a bloodbath phase, which means we should have 4 to 6 more days to go, and that we should break this intermediate trend line before the bottom comes. So we just need to be patient here, and we probably don't need to unless everything just unfolds perfectly and we get some kind of a clear, panic gap down day on day 6 or 7, then maybe in that point we might try and pick a bottom. But other than that, maybe we better wait till the weekly charts improve. There is no improvement in the weekly gold chart here at all. And I don't think it's unreasonable that gold could come down and test the 200-week moving average before the bloodbath phase is done. And especially in miners, I mean, there is no reason at all, right, as of today, to try and pick a bottom right here. There's nothing that would indicate that this is a bottom and ready to turn in the other direction. I'd like to maybe see some kind of reversal candle or something on the weekly charts before I try and wade into catching a falling knife right now. As you recall, the point and figure chart support comes in at $19. We're at more or less $20 right now. We'd still have another $1 to go before this bottoms. We could even test this support zone right in here. I believe this was a sell-off after the election. It's not completely out of the question that we could come down and test this zone as support, because we have clearly we have broken back down out of the consolidation box. All right, there we go. So here's the consolidation box. We did not hold at the 200 week moving average, and we did not hold at the bottom of the consolidation box. So we're just going to have to wait for some more extreme levels, and I'll show you sentiment here in a minute. We really don't have what I'm looking for in sentiment yet to pick a bottom. So I'm going to say there's no need to do anything tomorrow, and probably we're going to have to wait through next week as well before we try and pick a bottom on this. All right, so here's a sentiment. This is a intermediate term sentiment in gold. And if we do break that trend line, get down into the 1250, 1240 range, then I would think that this would be down here closer to 30% bulls, and I would be more confident trying to call a bottom if sentiment was just a little bit more extreme. As of today, this just seems too neutral for me right now to be at a final bottom in gold. I'd at least like to see this below 40% bulls, and something down here around 30%. I'd be a lot more confident trying to pick a bottom. All right, so let's see how we open tomorrow and see what the employment report, if we get any kind of significant moves. Again, I would caution about trusting anything that happens during the day in the gold market. Market's oversold. There's going to be buyers trying to catch a bottom, but until the bloodbath phase is over, usually those bounces during the day, intraday, they usually fade away into the close, and that's exactly what happened today. And I would suspect that tomorrow, if we get a bounce tomorrow, very likely the same thing is going to happen. All right, so let's be a little patient here. Let's maybe wait for some more, a little bit deeper extremes, or we get some improvement in the weekly charts. And right now we don't have that.